All right, we're diving into USDA loans, a great program, 0% down. U.S. Department of Agriculture is the organization that stands behind these loans, puts out the guidelines, helps with the insurance for them, and regulates this side of it. We're seeing them become much more popular these days. And what are some of the things that come to mind for you and why people are diving into these?
Yeah, I think there's more availability online. People are gaining access and learning more about the program because there's a bit of a misconception. People don't think about USDA and mortgages together, right? But in fact, they have a great mortgage program. There are some restrictions with income and geographic restrictions too, depending on where you're purchasing. But generally, the towns, by definition, in any state are generally eligible for the program. We're not talking about an agricultural area. The program is actually not designed to support buying a farm, right? Actually, what it's really meant for is buying that single-family home in a normal rural community town where maybe you have a working class that makes enough money to pay the bills every month, but it's just a little tougher to get that extra savings for down payment. So it's a great option in that sense. And you're talking about there is mortgage insurance on the program. Compared to other government offerings, it's one of the lowest with 1% they charge up front as their guarantee fee. And then they charge a smaller, one of the most affordable factors on the monthly side as well. So it can really be a great option.
And how's the credit profile in those?
Credit profile is similar to FHA as another government option. So you can be in that mid to high 600 range. Sometimes we'll see, a little bit of a better underwriting process if you're a little over 700, but certainly it's a little more flexibility from a credit profile standpoint.
So let's talk about debt-to-income ratio in the USDA loan program. I think it's a little bit tighter.
It is, yeah. Compared to other government programs that are a little more flexible, USDA will restrict that debt ratio a little bit more in some cases where, let's say, FHA might go to 50 or 55%. You're going to see USDA sometimes cap low 40%, sometimes even high 30s. So it can be more restrictive there. But if you do qualify, again, great option.
Yep. And another spot to be when we're talking about the requirements for the property is that a lot of times the InLaw Suite, right? The InLaw Suite typically in most programs is treated as a single family residence if it's like a legal in-law apartment. In the USDA, they're going to actually be pretty strict on that if you come across a property that is in the zone in terms of the address is inside the geographical zone to be eligible for USDA, you qualify within the income limit, which we are seeing some, depending on the town and the size of the family, six-figure incomes qualifying
exceeding
within
six
the
figures.
income,
Yeah, it's pretty generous.
The income limit. So there are a lot of people across the country that are going to be able to qualify for that. But you want to make sure that the in-law suite either doesn't exist, that there isn't one, or if there is, we have seen where the USDA appraiser allows us to remove the stove, remove the refrigerator, get rid of the in-law apartment and cap the utilities so that someone who does want to buy that property and not use the in-law suite and treat the home as a single family residence can put that property into USDA.
That's right. Yeah. One of the main differences here between this product compared to other government loans is it's reserved for single families, truly one unit only. Yeah.
Other things to look out for when you're looking at the properties is deferred maintenance, similar to FHA, peeling paint, leaks in the ceiling, any rot, anything like that. Red could be a red flag. Take photos when you're at your home and when you're at the you're showing for the property. You should have a loan officer who's willing to take a peek at those photos and let you know if they're seeing those things as issues. And so that's really important to keep a good eye on the property when you're out there when you're looking at the USDA loan. The other nice thing about the program is there is a streamlined refinancing. So once you've got your USDA loan and say the market improves for rate and you want to take advantage, there's a streamlined process within the USDA program for refinance, potentially without an appraisal, that just allows you to get to that lower rate in a much more smooth, streamlined process. So those are things you want to consider when looking at USDA loans.